Owners of rental apartments have many ways to minimize their annual tax bill, and these deductions are often the difference between a negative cash flow and a positive one. Hey everyone, Kim from Tax here. One of the things we focus on here at Tax is helping our clients maximize their tax deductions, especially depreciation. We consider a range of factors when calculating how much depreciation you can claim on your investment property. One of those factors is the property type, especially between apartment units and houses. Apartments have become an attractive option for investors because they're usually more affordable than houses. So in today's video, I want to talk about investing in apartments and how you can save thousands of dollars on claiming your depreciation deductions. Before we get into it, we want to be clear that this video is for informational purposes. In no way should you interpret this as tax advice. We always recommend working with a qualified accountant or tax agent to give you the best advice for your situation. Okay, so not long ago, there was a belief that investing in a house or duplex rather than an apartment was better. But now, with a rapidly increasing population, there are plenty of people out there who prefer to live in apartments. Many of these are strategically situated close to schools, shopping centers, and public transport, so naturally they can attract rental yield. Plus, with the property prices being the highest they've ever been, apartments are increasing in popularity and proving to be a high-performing investment choice. Like other property investments, the ATO allows investors who own an apartment to claim depreciation deductions as long as they continue to earn a rental income. And while there are many similarities on how depreciation is calculated for houses and apartments, some differences come up when you consider how the apartment was built. Let's take a look at capital works deductions first. Your capital works assets will be the structural components of your apartment, like retaining walls, floors, and doors, including the door attachments. You can claim these at a rate of 2.5% over 40 years from the date of construction. Now you may be wondering how an apartment can possibly claim more capital works deductions than a house, because surely a house is bigger and costs more to build? Well, I'm here to tell you that this is not necessarily the case. The gross floor area of a house is bigger, yes, but apartment units usually have multiple floor levels, so the building costs ends up being similar to the house. This means that the owner of an apartment unit can claim an equal or even bigger amount in depreciation on capital works compared to a house. There's another key difference. Apartment units can also claim a small portion of the common areas, further increasing the depreciation that they can claim under plant and equipment. So, both houses and apartments can claim on standard plant and equipment such as the oven, light shades, and blinds, but apartment owners can also claim strata equipment found in the common areas of the apartment. Assets found in common areas include lift shafts, staircases, gym equipment, and fire safety equipment. This source of depreciation allows owners of apartment units to generally claim more depreciation than houses, especially during the first few years in depreciation. So, essentially, due to the higher cost to build and eligibility to claim strata items, an apartment unit owner will generally be able to get a higher tax deduction per year than an owner of a house. To claim the deductions, you'll need a tax depreciation schedule. A depreciation schedule is a report that details the eligible deductions you can claim on your property. The depreciation report is typically prepared by a certified quantity surveyor who will inspect your apartment and assign a value to each asset and tell you how much it has already depreciated and how much it will carry on depreciating. The best part? The quantity surveyor fees are also tax deductible. Depreciation schedules are one of the most effective tools you can use when you own an investment apartment. So, if you would like to speak to a quantity surveyor to help you get started on claiming your apartment's eligible deductions through a tax depreciation schedule, get in touch with us today. We can get a personalized depreciation schedule for your apartment delivered to you and your accountant within 5 to 10 business days, so you can start saving. If you have any questions about tax deductions for your apartment, please leave them in the comments below. Otherwise, make sure to check out our YouTube channel to subscribe for more property investment tips. And make sure you click on the bell icon so that you can get notified of the next video. I'm Kim Quach from GeoTax. See you next time.